Now, despite what you've read online, shared ownership can be the perfect scheme for the right person or family when it comes to getting on the property ladder. There's no scaremongering here. I'm going to be going through what shared ownership is, how you staircase, and how you can sell it at the end. My name's Sam and I'm a mortgage expert here in the UK. And on this channel, I'm going to go through everything from shared ownership, home buying schemes, lenders, interest rates, different types of products, whatever it is that is relative to mortgages, I go through it here. And if that's a bit of you, you're in the right place. Do me a favor, like and subscribe, and let's get into this video. All right, so let's take a look at shared ownership. Shared ownership is a scheme in the UK that allows people, families, single people, to purchase a property where affordability, budgets, and deposits may have prevented them before. Now, what happens is you typically purchase a share of the property. This can range from 10% all the way up to 75% of the purchase price. Now, what happens with the rest of it? Well, you don't own that other percentage. A housing association would typically own it. So let's take a rough example. You own 50% of the house. A housing association will also own 50%. You'll pay a mortgage payment to a lender on this 50%, and on the other 50%, you're going to pay rental to a provider, like a housing association, like I said. Now, don't worry, because it's not always going to be like that. You do have the option to staircase all the way up to 100% as well, and which is we're going to go into it. Now, with shared ownership, the beauty of it is you can purchase with no or very little deposit, and it gets you access to a much bigger property. Using the last example, if you buy 50% of a house and it's 100 grand, it means the overall house is worth 200 grand. Now that means extra bedroom, a driveway, a bigger garden, than something where it's typically just going to be £100,000. Also, it means your deposit that you're saving for is relative to that share. So you're not trying to save a 10% deposit of a £200,000 house. You're saving a 10% deposit for 100 grand for a house that's worth £200,000. Are you with me? So what will happen over time? We can staircase, we can purchase more, and at the end, we can own 100% of it. So taking a look at selling when you own 100% of the property. Now let's picture this. You own 100% of the house and you're going to try and sell it like any regular home. We're going to list it on the open market. We're going to instruct an estate agent and negotiate a sale price. Now, typically with shared ownership, the companies actually have a, what's the word? Mine's genuinely gone blank, an estate agent. So they might have an in-house estate agent, and as part of the contract they say, once you've staircased and you own 100%, you can then sell it through them as well. You might get a little bit better price, but you might also be able to list it from somebody else as well. Look at the recommendations online. Now, when you own 100%, the entire sale proceeds would go to you, minus any mortgage costs or other repayment charges and that kind of thing. So as we do go through that shared ownership and staircasing process, ultimately it means you own more, and therefore when you sell it, you're going to get more money in the back end. Now, there might be some typical costs you need to factor in. Estate agents are going to be the first one. This might be a fixed fee, say 995 plus VAT, but it might be up to 1%, 1.25%. It all depends on who you're going to sell the house through and what portals are going to use and what marketing materials are going to be produced as part of the sale. The other thing is the solicitor fees as well. Now, the solicitor may charge an extra fee because it has previously been shared ownership. There might be a few more forms to fill out, but you're going to be looking at the solicitor to carry out the sale of it, and you need to factor in their fee. The other thing as well, any other repayment charges. So if you're in a 5-year fixed deal with a lender and you sell 12 months in, then you might have a 4%, maybe 5% fee of the outstanding balance. But if you do own it 100%, there's no restrictions from the housing association, then the sale would be fully in your control. So on the flip side, when you don't own 100% and you're trying to sell the property, you're only going to sell your share. Now, you must usually offer the housing association the chance to buy back the house, or known as the first refusal. And they're going to have some stipulations and regulations around who you can sell that back to. So let's look at your circumstances. You might be a young couple purchasing and have qualified under the shared ownership scheme. The same thing applies. So to purchase the shared ownership property, not everyone can go right move and apply and put an offer forward and be accepted. You have to be or have certain criteria that forms part of the shared ownership scheme, like income, for example. If somebody's on a £300,000 a year income and they're trying to buy a property at 50% shared ownership, their income's maybe too high to qualify to purchase that property because it's under the affordable housing scheme. So there are a few challenges and things that you should be aware of. Now, if you don't own 100%, then the pool of potential buyers is going to be smaller because we're very restrictive. It's going to be under the shared ownership scheme, which means if it's a smaller pool of buyers, then the sale might be a bit slower. But if you're in an area with high demand, you might be all right. The lease clauses may restrict the open market sales or require a mandatory buyback, and the short lease length, maybe under 150 years or under 80 years, can cause some complications, I'd say, with lenders in the future, because they might want a leasehold property with at least 150 years. So we need to make sure the lease of the sale is all documented for any potential buyers. And finally, ensure all service charges, ground rent, rent to this housing associations or lease obligations are all up to date to avoid any delays in your sale. And there we have it. That's my ramblings today, all about selling a property under the shared ownership scheme. Now, if there's anything specific that you want me to answer today, drop them in the comments below and I'll get back to you as soon as I can. Or if you want a direct answer, just drop me an email. It's sam@ukmc.co.uk. That's it for today. I hope you enjoyed the video and I'll see you soon.